All right. Well, welcome back to the Last Visit First podcast, the post-acute care industry's leading podcast. Today, I'm very blessed to have Alex Veach, who's a partner at Agenda Health, on the podcast with me. Agenda Health is a healthcare-focused advisory firm specializing in mergers and acquisitions for home health, hospice, and post-acute care organizations. Alex has built a pretty good reputation out there as one of the most active advisors in the lower and middle market, helping founders, operators, and private equity groups navigate the complexities of buying and selling their healthcare businesses. His work sits at the intersection of valuation, deal structuring, and positioning agencies for successful exit. Alex has advised on transactions across the home health, hospice, behavioral health, and related healthcare services, working with both independent operators and large multi-state platforms. His approach emphasizes preparation, storytelling, aligning operational performance with buyers that are actually willing to pay. Alex brings a practical, market-driven perspective on timing, valuation, readiness, and helping agencies understand not just how to sell their agency, but how to get ready to sell their agency. We're going to jump into all the details here, and really excited to have Alex on the show. So, Alex, welcome.
Thanks, Tom. Excited to be here.
Yeah. All right. Start with tell us about you. Who are you? Where'd you come from? How'd you get to
Sure.
Agenda? What's your
Yeah.
career? Let's walk through that first.
Love it. Yeah, my name is Alex Veach. I live in Austin, Texas. I live here with my wife and 6-month-old son. And so I have been with Agenda here for edging close to a decade. Prior to that, worked in finance and wealth management a little bit. But actually started with Agenda when I was 18 years old. My dad, Al Veach, is our founder and CEO, and so he founded the business in 2008. I managed to convince him to let me come aboard here in, gosh, I guess 2016, 2017, somewhere in there. And so at that point, it was he and I and two other guys, and over the 10 years since, we've been blessed to scale our business to over 40 employees and active across the country across healthcare services. And so that is me. Very excited for the conversation here, and have enjoyed working with the Maxwell team in various forms along the way.
Yeah, we've done a lot together. Tell us about Agenda. So, what do you guys focus on? Small to mid market. Where do you focus most of your attention?
Yeah, so we're focused on healthcare services. I think that's the first thing. Our mission, our focus as a firm is grounded in an opinion that transacting in healthcare services is different, should be different, right? The way that you sell a healthcare services business or market a healthcare services business or raise capital for one should be different than how you might do that for a restaurant or a car wash or a manufacturing company of some kind. And so, we focus a lot of our time into understanding the verticals in which we get the opportunity to work in. Three big buckets for us. One is post-acute, and hospice is our founding focus all the way back in 2008. So have almost 20 years of deal reps in that space. But home health and home care are also big pieces of that for us, and so that's a big cornerstone we categorize as post-acute. Behavioral health is also big for us, and so ABA, IDD, counseling, substance use disorder, those spaces are newer for us as of the last 5 or 6 years, but are spaces we've seen meaningful engagement from our buyers in, and we have a lot of wins in those spaces as well. And then third, and newer for the space and newer for us, is health and wellness. And so have had the opportunity to participate and advocate for owners in med spa and plastic surgery, longevity services, and some other smaller niche services as well. And so that's us. I think, what stands us apart, first and foremost, we're faith-based in our approach. And so built our business on the foundation of our Christian faith. And so that doesn't mean everybody that we work with has to share in that, but from our employees' standpoint, what we tell them is the principles of that faith being hard work, integrity, and being people that do the things we say we're going to do is important for us, and is a prerequisite for employment at Agenda. And so,
Wow.
that's that. And then the second piece of that is we are sell side focused. And so our goal, our mission, is not to go work for whoever we can to earn a buck. It's to partner with and advocate for business owners, for entrepreneurs, for family ownership groups, and for clinicians that have started agencies for the purposes of solving a problem and meeting a need, and not just making a buck.
Yeah, that's awesome. All right, let's start simple. What is the actual market right now for selling a home health or a hospice agency?
Yeah, that's a great question, and one I think we could spend probably the rest of our time here addressing. I think, we're seeing a great marketplace. I think that you had certainly, if you went back through the last 5 years of activity in the space, you would be doing this quite a bit with just the boom of activity that was 2020, 2021, and 22, and then the trough of activity that was 2023 with soaring interest rates and that post pandemic M&A environment. We're starting to see that creep back up. We saw home-based M&A, crack over 100 transactions in 2025. By our estimation, about 25% of that marketplace was our firm's work. That was up from about 84 in 2024, and so saw some great growth there. You also have just a rapidly aging population, right? You have about 60 million Americans over the age of 65 now. By 2030, that'll be close to 75 million. In 2050, 85 million. And so you have a rampant consumer need for this care. Right now, across the country, on average, Americans over 65 have at least one chronic illness, right? And so the need for that care and care at a high quality level and at home is only increasing. And so we have a lot of those conversations with private equity groups across the space that approach us asking about the opportunity. That's my spiel right there. And so from an owner standpoint, I think we talk about, just with all of the deal activity in the last few years, a big focus from buyers into quality, into the brands you've built, the reputation you have in the community that you're in, the quality of the team that you've built. And so for agencies that possess those things and invest in those things, we have no shortage of offer interest from investors in the space. So we've seen a great, our firm is a great indicator of how the space overall is doing, and we've had two record years in a row in 2024 and 2025, and we're pacing for one here in 26.
Congratulations. That's awesome. That's really good. All right, what are most owners getting wrong about valuations today?
Yeah, that's another great one. I think, generally speaking, there's a thought that I've observed that owners get to pick, how they value their business, right? You have owners that are going to run, a little bit on the leaner side, focus on margin, and as a result operate at higher than market profit margins, that are going to say, hey, I want to be valued on EBITDA, right? You're going to have others that focus on scale, that don't pay as much attention on margin, that are going to say, hey, I want to be valued on revenue or census, right? And then you're going to have a third grouping of owners that say, hey, I've built a great business. We've been around for 30, 40 years. We're well known in the community, that are going to want to focus on an intangibly driven valuation. And what we try to advise owners on is it's all of it matters, right? But none of it really matters any more than the other, right? It's the analogy that we always draw is that of a stool, right? If a stool is going to sit level, all three of the legs have to be the same length. They're all very important. And so what we advise owners on is have conversation, preferably with us, but if not, at least with groups like us that can advise you on how to build out your business holistically. Don't zero in on just one aspect of what you think is going to drive value, because the market, when you enter it, is going to be focused on everything.
Yeah, that's really good. And what are you seeing? Let's break home health, break hospice, and then break personal care and private duty, and you can talk about behavioral too. Like, what do you see in evaluation numbers at? Is it the smaller the guy, the smaller the number? The bigger the guy, the bigger the number? Is it what are you seeing from ranges? And you don't get to give exacts, but give me some ranges.
Sure. Yeah, I think, we lived in a world a few years ago where I felt like multiples were pretty linear with size, right? And they're still highly correlated, right? That the larger the opportunity, we always draw the analogy of a diamond, right? More carats a diamond is, the more value per carat you're going to get, right? And so I think we're in a world now where you have so many platforms that have been built and so many deals that have been done. We a value that I think we add for owners out in the market is knowing where the exceptions to that rule might live, right? And I mean, knowing the buyers that really need to have a hospice in Dallas, right? And really need to fill in a home care hole in Minnesota. And I think that 20 years in these spaces has bought us a very granular understanding where a lot of these platforms are, how they think about deals, and generally, hey, we're going to quote valuation based on the market. But we also focus a lot of our outreach in markets where we know we can buck that trend, and we can provide an exceptional outcome for a business owner. And so I think that, broadly speaking, there are a lot of markets, especially, in the hospice arena, where folks are looking to dive back in, right? I think last few years have been slower hospice wise. And so, we can measure how the space is doing by the quantity of folks they call us, asking about platforms. Right. And so that number has been expanding over the last few months as we start 2026 here. I think be- behavioral health, ABA has been so active. We've done 11 transactions alone in ABA in the last 12 months. And so it's just been a highly invested space. I think there's a lot of deal flow out there. I think that we try to be intentional about making sure the deals we market, we set rational price expectations, and we put in front of the right folks. And so that space has been huge for us. And then home care, I think you've seen a lot of investment in the space. You have a lot of a very robust platform environments. And I think what we talk with owners about, or try to at least, is that, hey, a lot of those platforms, they're going to go through their own exit themselves, right? And so, how do we, with knowledge of that, advise owners to maybe move their timelines around so that they don't miss out on an opportunity to be a part of something like that?
All right. You talked about platform a lot. Explain the platform to our listeners. Yeah, of course I know what it is, but they need to know.
Yeah, platform means a different thing to a different person depending on the day of the week sometimes. But generally speaking, platform for us is a a business that is a foundational investment for a buyer, right? And so, the first investment that they're going to make, that they are then planning to make add-on acquisitions to expand that platform. And so, we use platform for deals of a certain size. For some buyers, that's 5 million of EBITDA. For some, that's 3. For some, it's 10. Right. So, based on the investor you're working with, that can vary. But in a buyer sense, we use platform as a descriptor of a group that's making acquisitions. Right. Their platform is the business that they want to buy add-on acquisitions for, to grow the overall size of the business.
Yeah. And so I always think about platform is, do you have the sophistication? Do you have a sales leader? Do you have the right technology in place? Do you have the right compliance and QA systems in place? Recruiting is a big area. I know if you have those systems in place, then when you go do an acquisition, you can integrate that acquisition. You can synergize the right pieces of that acquisition. But if you don't have a platform, you're just trying to bolt two things together and create a platform, it's harder. And so I always think about a reputation as well. Like, have you done it before and have you been successful at it?
Yeah, when we're marketing a platform or a deal we think is a platform, it's a different process, right? The book we build is more robust, it's more thorough. We're selling a story just as much as we're selling a set of KPIs or, EBITDA or whatever, right? And so all of that plays into that calculus a lot more. Add-ons, that story still matters and we're still emphasizing that, but, a little bit more of a metric driven valuation ideology in most cases there.
Yeah. All right. Do you think we're in a buyer's market now or a seller's market
I
as
I,
of
I
today?
think as of today, okay. I think it depends on how you slice up those verticals. I think that, certainly would have said a year ago that we probably existed in a bit more of a buyer's market. I think as we've seen interest rates drop, and hopefully we'll still see them drop later on this year as some of the other macro factors quiet down. I think we'll enter into a little bit more of a seller's market akin to what we saw a few years ago. right? So I think that there's trillions and trillions of dollars of dry powder or capital that investors have raised that they're ready to deploy, and they've held off to wait for better circumstances. They can't hold that money forever, right? And so they've got to
Sure.
return the funds that they've raised. And I think at some point you're going to see that hopefully later this year, really drive more of a seller market where opportunity is at a premium, right? I think if you isolate down into the specific markets that we cover, home health, I certainly think historically has been a little bit more of a buyer's market for sure, with the reimbursement trends, with Medicare Advantage uh, penetration, and just an increasing COGS environment where margins are only shrinking, right? And so with all of those things, certainly have seen more of a buyer's market there so far. I think as we get further, we just saw an announcement of a Medicare Advantage rate increase for next year of 2.5%, something like that. You have that, and then you have some of the bigger home health players in the space, like Inhabit and like Alera, get back on the right footing to go back out and do deals. And so we think that'll create a much better environment for home health owners specifically than we've seen the last few years.
It's interesting. So we're seeing evaluations go down in the technology world, especially just because of AI and we've seen kind of a drop there, but you still have the same amount of money that are in these private equity or funds that are out there, and so they got to deploy that fund and they got to deploy that. Home health hospice is a little bit safer bet. It's a services based organization. AI is not going to replace a nurse giving a hug to a patient in a home or taking care of a wound or some of those kind of things. Maybe for a long time. Maybe someday robots are going to help do that, but I think there's a lot of things that AI will help in the home health and hospice space, but you're seeing these, PE companies and investors that are, have money that spend and they need to spend it. So I think it's a really interesting comment. And so is home health and hospice a safer bet? The other thing, just as a thought on some of this is, there's been a lot of deal flow. We saw the, Agapes and the Inhabits and the Aleras and the Amedisys and LHC and United Healthcare and all that. Does all that deal flow make deals more advantageous to go do? Like, so if I have a 1,000 patient hospice provider or 500 patient hospice provider, and does that make me more attractive or less attractive, do you think?
I would say absolutely more in a lot of cases, because what you've got to think about is whoever is buying or recapitalizing that platform, they're doing so with a 5-year whole plan, on the post side of that, right? So part of that's going to be organic growth and kind of whatever opportunity they see internal at those platforms to make improvement. But a big piece of that's going to be M&A at a lower market level, at a lower multiple level, and they're going to want to utilize the infrastructure of that business to go out and be able to create synergy, to create value by buying smaller agencies, right? And so, I won't name names, but we've been reached out to by a number of these entities that have gone through recent acquisitions, or recapitalization is probably more appropriate term, but number of groups that have approached us and said, "Hey, we're probably 2-3 months from really needing you guys to light it up, right? And seeing a lot of need for deals, and hey, these are the markets that we're going to be interested in." And even in certain cases, not all, but in certain cases, hey, if you could find us something in market ABC, we'd pay a turn or two above market if uh if it's the right deal, right? And so I certainly think that as these platforms change hands and there are new folks sitting in the boardroom, part of the game plan for them is always M&A.
Yeah. So and you said something that's funny that always want to make sure people understand. What's the difference between an acquisition and a recapitalization, in your opinion?
Yeah, so I mean, there's a ton of nuance around that. I think the biggest distinction is you have in a recapitalization, you have former ownership sticking around. You're swapping out a portion of the equity, but not a total turnover of the equity structure. And so there's a ton of permutations around what that can look like. But there's a platform that we work with very close on the hospice front that went through recapitalization event, and all the people that we work with are still the same, right? Still the same individuals throughout most of the C-suite, but there's a different group in the background that's writing the check. And so a lot of the time, the sponsor that's previously involved will actually stay co-invested at some level, right, and take the ride along with. But the primary sponsor that's driving the platform from a strategic standpoint changes.
Yeah, I mean, these, private equity groups are, financial platforms, they have obligations to their shareholders and LPs. And so they'll spin the deal and bring in another partner as well. But a lot of times they stay. I mean, it's what we do a ton. We stick around, and if we believe in the acquisition and we're selling it, we believe in it, we want to stick around and watch it continue to grow. And, I think consolidation is a good thing. And, so I always could find it as acquisition would be you're selling it and giving the keys or handing the keys over and walking away, where, you're keeping the staff and some of those things, but you're walking away as the leader or the owner of the business. Or recap is you're just bringing in, new money to come in and help you grow and do different things. So, and new money equals new ideas, new money equals new investments. Maybe it's a technology platform, maybe it's more QA, quality, compliance, sales, recruiting, marketing. And by the way, a lot of these, private equity and venture funds and these kind of things, they have a lot of other resources around them, or they have other businesses that they can bolt on. Maybe they own part of the technologies, or, they own a staffing company, or they own a recruiting or a marketing company, or those kind of things. And so I don't think it's ever a bad thing. I mean, it can be bad if you get the wrong partners, but it's usually a good thing to have those come in. All right, let's jump in a little bit more on the what are the actual buyers? What are they doing? So, what are the top three things that buyers care about when they look at an agency? So let's start in the smaller agencies, so that 250 ADC and below. What are they really looking for?
Yeah, I think that it definitely. I'm glad you segmented it around size. I think it definitely can be different from a size standpoint. The smaller deals are going to look different. The value drivers are going to look different. But I think, first and foremost, from my perspective, in the environment that we're in now, is compliance. I think that's really climbed the list. I think 2021, 22. Not that the buyers weren't asking those questions, but from my perspective, I think it was a little bit more of a check the box than it was a true, hey, let's get into the nuts and bolts of the compliance structures and policies that exist. And so, I just did a panel with Rich Tinsley and Angelo Spinola at the Elevate conference in Charlotte here a few weeks ago, and we talked about this. And what Rich said that I thought was really insightful was it may not be as much about having a chief compliance officer and having all the right things in the handbook in the right place. It's about a spirit of compliance and a culture of compliance, and buyers can tell, right? And as they get through their diligence, it's not something that you're going to mislead a buyer on. And so, hospice, that's super critical, right? Having the right referral structures in place for your marketers, things like that. Buyers going to make sure they do their homework in. So I think that's important. I think, the other thing that's valuable for us, where I get excited at an opportunity, is just a consistent trend of growth, right? It's not about growing 50, 60, 70%, in one year and five in the other two. For me, that's a lot harder to sell, right? From a buyer's perspective, they're going to say, hey, what drove this, and how am I going to replicate this in my own ownership of this business, right? I think sellers a lot of the time will not think through the fact that from a buyer's perspective, they're not buying a business to sit on the shelf, right? They're buying a business to grow it further, right? And so they've got to see opportunity for that. And so I think consistent growth is a huge thing that drives premium multiples and valuation, for us to be able to point back 2, 3, 4 years into the past and say, hey, this has not been an overnight thing. We've built this slowly and intentionally over time. So that's great. I think the third thing is the team, right? And I think, I mentioned it third, but it really arguably could be top spot. A lot of the problems or challenges and narrative that we solve for as a firm on our deals is explaining to a business or to a buyer that how they are going to buy a business that has been family or founder owned, with an owner that's 50, 60 hours a week in the business, have that owner hit the beach and step out of the business, and have that business not fundamentally be completely different, right? And so that key man risk or continuity risk, we spend a ton of time solving for with buyers, and we find a lot of buyers are willing to look past a lot of other things if they feel like the team at the level underneath ownership is around for the long haul, has good tenure, has good experience, has good incentive structures to align with as they, you know, assume ownership of the business. That's a huge thing that we have a whole segment of the materials that we build allocated for.
Yeah, it's important. It's important. You get in there and, half the team's ready to retire. They're going to get a paycheck and they're ready to leave. Well, what am I buying? I mean, these are organizations that are, people-driven organizations, right? I mean, really, when you're buying a home health or hospice agency, you're buying a process, a bunch of staff, and some patient relationships, sales and marketing relationships, and a team that's put that all together. And so if half the team's ready to go retire and leave, it's super important to look at. One, can we replace them very easily? And two, if the CEO wants to retire, can we bring in a new CEO, or they have somebody ready to be the CEO? So lining all that up is super important. Let's talk a little bit about timing. And so I did a podcast a couple of days ago with a couple other PE guys. Timing's a big deal. So you think about like the proposed rule just came out for hospice. That's going to be a 2% increase depending on where you're at in the wage index. The cap rate went up a little bit. They got all these new rules coming in where they're going to grade every hospice based on, live discharges, length of stay, time in the home, visits, all these things. There's 9 of them. And the timing of these deals, if you're putting your deal out and the proposed rule comes out and the proposed rule is not as good as what we thought it was, or like 2 years ago when they came out with this, giant hickey that they were going to give everybody in home health, that's got to change the cycle of the deals. And so how do you guys think about that from a banker perspective or a representative advisor perspective? How do you think about that from getting a deal out in the end of the market?
Yeah, that's a great question. I think it's different from deal to deal. It has a ton to do with the business owner themselves, right? We have plenty of business owners that we work with where, hey, they're not in a rush, right? That, selling in Q1 of one year, Q1 of the next year, there's not a whole lot of life circumstance forces that are driving the transaction. They just see a, a strong opportunity to recoup the investment they've made into their business. And so based on what the goal that business owner has, we'll fluctuate that. We dealt with this last year, right? We had a sizable home health platform that we were working on, that we were in market on in November, I want to say, maybe even a little earlier, right as there was a proposed rate cut out for home health. It was, I want to say 3 or 4%. I don't recall a specific figure, but it was detrimental, right? For a service line where margins are on average already very thin. And so, a lot of the buyers that we spoke with, saw that as a risk point. But to head into my second answer, I think we get intentional about how we build buyer pools to solve for a lot of that, right? And so, we focus on including groups that are already exposed to what we call segment level risk, where, hey, if home health rates drop, I'm still going to own a home health business. And the only way to solve, or one of the few ways I can solve through that segment level risk, is by building out my platform further, by expanding. I think we solve for a lot of that and how we build our buyer pools and having folks at the table on these deals that actually know the space and actually know how these changes from a rate and regulatory standpoint are going to be handled in practice. And so, look, we roll with the punches. There have certainly been transactions where, as we hear through the grapevine or see announcements that things are going to change, we'll hold back. We did that earlier this year in Minnesota, right? We had several opportunities in the state of Minnesota that we were more intentional and careful about how we timed. But at the same time, a lot of that we will make a collaborative choice with the business owner on. I always say for our guys, we serve at the pleasure, right? We aren't the bosses of the processes we run or the deals that we manage. We have a boss, and it's a business owner, right? So for some owners that say, hey, I'm ready to retire, you've told me all the risks, and I still want to go out, we'll do everything we can to suppress that. But at the end of the day, we have a boss, and we want to make sure that the non-monetary goals of the exit are accomplished as well.
HCHB is proud to sponsor the Last Visit First podcast, which explores the complex issues faced by today's home health and hospice providers.
In the spotlight today, Chief Revenue Officer Hannah Pearson, explaining how HCHB uses technology to connect people.
One of my favorite phrases is relationship architect. The focus is about the client and building the right community, the right fabric of community around our customers, making sure that from the very bottom to the very top, they had a resource and a contact to reach out to with any problems, and that we could connect them quickly and expeditiously to the right resource. That's where the client success team was born, and we touch people at every level of the organization.
In home health and hospice, growth isn't just about closing deals, it's about execution. I'm Jay Duty, Chief Operating Officer at Maxwell Tech. We work with operators and investors navigating mergers, acquisitions, and rapid growth. And we consistently see the same challenge. The deal closes, but the organization struggles to perform the way it had. That's where Maxwell Tech delivers. We specialize in post-acute M&A optimization, standardizing clinical and operational forms, redesigning care pathways, aligning workflows across disciplines, and leading enterprise implementations from planning to execution. Our consulting is focused on throughput, productivity, compliance, and technology adoption, so organizations don't just integrate on paper, they operate as one scalable platform. This is not slide deck consulting, it's operational execution. We help organizations reduce documentation variation, improve their throughput, and ensure clinical, operational, and technology strategies are all aligned, especially in today's environment of reimbursement pressure and regulatory scrutiny. If you're integrating, scaling, or preparing for your next phase of growth, we'd welcome a conversation. Visit maxwelltech.com or email sales@maxwelltech.com. From first touch to last visit, this is how organizations scale with confidence.
Hey, this is Alex with Steno Health. Our mission at Steno is simple: to improve the quality of life of the post-acute care clinician. Steno uses ethical, compliant AI to capture visits in real time and turn natural conversations into accurate notes and forms. We are clinicians ourselves, and we've designed Steno to never feel like an extra click or an extra burden in your day. The goal isn't to replace anything, but to support you in every aspect of your day so you can spend more time with your patients and still have the energy and freedom to be present with your family at the end of the day.
All right. So building relationships is a big part of what you have to do. I mean, you're building relationships with buyers, you're building relationships with sellers. You spend a lot of time in that relationship business. I mean, really, as advisors, that's 60, probably 70, 80% of what you do constantly is you're, filling the pipeline, getting people ready to buy, getting people ready to sell, finding buyers that want to buy the businesses that you have, sending out the marketing materials, creating the books, all those kind of things. How do you teach that? Like, so you hired 40 people in your organization. I know your dad's amazing at it, by the way, and I know your dad real well. And it's one of his secret traits is, he's got relationships with everybody in the industry. But how do you teach that to those other 38 people that are not you, that aren't your dad?
Yeah, that's an exceptional question. It's one we've asked ourselves a lot of the time over the years. I think, as we were growing the business, we weren't hiring bankers from JPM or, from other investment banks. We weren't hiring, folks that were hospice experts and home health experts. We were hiring people that we genuinely thought were good people, that we know would work as hard as they needed to figure it out. Right. And so, a lot of the time that was friends and family in early days. It was a lot of college kids. I was in college when I started working for the business. Right. And so, like any other business owner, we fought through scaling inside of our limitations. And what we got really good at is what you're talking about, right? How do we take somebody that has no banking experience, has no, sales or outbound calling experience and no healthcare experience, and make them dangerous enough to be able to talk with a business owner, right? And so, I think a lot of that we focus people on is, hey, at the end of the day, you're a human talking with another human. Right? Don't feel like you have to be something that you're not. Just be a human being, just be a person. Right. And so, we focus a lot around the human element of things. We don't ask our guys that we brought that we've brought on over the years to try to talk about things that they don't know or they're not comfortable with. And we have a structure in place where we have a leadership team that oversees our advisory teams that are subject matter experts that we've had the opportunity to bring in. And so I think a lot of that is humility, not trying to act like you know things that you don't know. And then the other aspect of it is just reps, right? It's iterative. It's a repeated honing of your craft, right? And learning how to solve for what doesn't work and move quickly in the direction of what does, right? And so that's been a big battle for us over the years. And what's been a blessing is as we've grown, now we get to bring in people that I look up to, and I think, man, that, you're a stud, and Al jokes all the time. He's like, I feel like I'm very quickly becoming not good enough to work at Agenda Health, which is the best problem to have. And so, we've been excited about that. And you're absolutely right. The relational aspect of what we do is so much more important than, how pretty the spreadsheets are, how pretty our books are, or the financial wherewithal that we have. It's all about the bonds that you build with people. That's something we've certainly enjoyed with you and the Maxwell team over the years. And the world we live in is small, right? And so the bonds that you build, how you treat people, it lasts.
I agree. I totally agree with you. And it's something that we pride ourselves in. And I've spent my whole career building relationships with everybody in this industry. And it's important, and I know if I call somebody or text them, they're going to pick up the phone and call me back. And those things matter so much. And it's hard to teach. It's really hard to teach, especially to the new young entrepreneurs that are out there. They're so text based. Like, I'm just like, pick up the phone and call them. Like, get on the phone, let them hear your voice, get on Zoom, talk to them, use your ears, not your mouth. Quit using your mouth all the time. Use your ears.
Mouth and fingers, man. We coach a lot of folks, and Al drilled that into me from a young age. Al's always been the exact same. Hey, I'll be typing up an email. This is early days. I'm like, why didn't you just pick up the phone and call them? Right. So, as we bring folks in, we tell everybody, hey, you're not going to talk with any agency owners purely as a result of the fact that you have an Agenda Health email address, right? You're going to have to go out. They're going to have to hear you. They're going to have to see you. And so we absolutely have seen that, what we do is the most important economic event most owners are ever going to experience, right? And so, the portion of business owners that are going to do that because we wrote a very good email is very, very small, if it exists at all.
That's right. That's right. I mean, you got to do the outreach. You got to use email, all those kind of things, but pick up the phone and call people. It's not that hard. Have a conversation and build a relationship, right? And so at what point are you building that relationship? So is it, I mean, if I'm trying to get a deal, if I want to get a deal and I'm on your team and I'm trying to, find someone that wants to sell their agency and I'm working really hard, is that 12 months, 24 months, 36 months? I mean, when does that relationship start?
It varies. I think there are business owners that we catch on the right day, that have had a change in life circumstance, that have just had a couple bad weeks in the office and are just done, right? And so there are folks that we speak with where, we're having our first conversation one day and we're signing an engagement agreement, a few weeks after that, and we're in market a month or so after that, right? So it certainly can move that quickly. I think with most owners, especially in the size range that we want to do deals, it's a several year process, right? And how we add value there is we'll do a complimentary valuation analysis for business owners, whenever they want. Right. And so, we have a whole, several hundred owners that we'll do that for every year. We do about 30 of them every month. And so we'll do that whenever they want. And our pitch for that is, hey, there's no Zillow for what's the value of my business, right? You don't get to go online and figure that out, at least not with any efficacy. And so we're happy to provide a service for business owners. We think people should know, right? If it's your most important, economic asset and it's your life's work, you have an obligation, I would say, even to know what the business is worth, right? And so, and also how you can improve it, how you can build it for when you eventually transact it. If that's in a month, great. If it's in 3 and 5 years, great, right? So, we'll do that for business owners annually over the, 3, 4, 5 years. Our catchphrase is, as you're preparing to sell your business, begin with the end in mind, right? Every choice that you make as you build your business from the very, very start is going to have an impact from a transactional perspective. And so, it needs to be a thought that you have as you build from the beginning. But additionally, practically, we tell folks, hey, 24-ish months is probably a good mark where we're going to be able to get in. We're going to be able to take a look. We're going to be able to refer the Maxwells of the world in to help you get ready. Little soft, shameless plug there for you there.
Thank you, buddy.
No. So, but there is time that takes, right? And preparatory work is important to make sure that you maximize your value outcome and that you know the answers ahead of when you have to take that test, right? So,
For
practically
sure.
speaking, I think starting, 24 months ahead of time and figuring out where you are and making a decision at that point. Hey, am I where I need to be so that my family gets what it needs out of this? And is the business where it needs to be for that? And then moving forward from
Yeah, I don't want to add more work to you, Alex, but I would advise people if they're listening to this and they own a home health or hospice agency to spend time with bankers, spend time with advisors like Alex, and get on the phone with them and know what's going on, know what buyers are out there, know because timing's a really big deal, right? If I have I always talk about the Michael Jordan rookie card. Like, what's a Michael Jordan rookie card worth? It's worth what somebody's going to pay for it, right? It may be to one buyer, it may be worth everything. To another buyer, it may not be worth much. And if you don't collect cards, you don't really care about it. But so if Aviana's out there, or one of the publicly traded, or UHC or somebody like that's trying to buy something and they want to be in, your territory in Oklahoma or your territory in Minnesota or wherever, then the timing's got to be right. And so having conversations with, guys like Alex in this industry that are, they're spending a lot of time talking to these private equities or venture capital or bankers and all those kind of things. So it's not going to ever hurt you to have a conversation. It's not going to ever hurt you to give an evaluation. It's not going to know where you're at. And then they can also come in and help you look at the business. And we work a lot with them on, getting agencies ready on the sales side. And, when are you, have you done a chart audit inside your organization? Have you made sure your copy programs are right or your QA programs are right? Or have you looked at your sales and marketing strategy? Have you looked at your leadership team and make sure that they're correct? Have you looked at your tech stack? Are you using all the right tools and are you using the best of breed out there? Because that will increase your valuation. I'm a firm believer that if you're on the right EMR with the right technologies around it and you're doing the right thing clinically and your outcomes are right, your star ratings are right, and your rehospitalization risk scores are right, you're going to be more attractive and people are going to want to buy you and more buyers are going to want to look at your business. And so why not use the tools? And by the way, Alex does this for free. So he said complimentary. I heard that. So, and when he goes to sell your agency, it's not free. Nothing's free in that world, but it's important to be
no,
ready.
sir.
Talk a little bit about EMR data, extraction of data. How do you get ready from a finance perspective, a clinical perspective? Because I know a lot of these exercises, and I've been a part of a bunch of them, is the buyer is testing the seller on, do they really have the data? How long is it going to take them to get the data? How long is it going to take them? If I ask you for a length of stay by P10, cap process by P10, or, or the provider numbers, how quickly you can produce and generate that information is going to give me more confidence that you know what you're doing in your business. And so talk about that a little bit. How do you guys coach, sellers through this process?
Sure. Yeah, I think we staff our firm to be able to meet that obligation, right? So I've got associates and analysts, and we've got folks here where that is their sole job and process is to drive the flow of information, so that we make sure we never imply, any lack of infrastructure, or availability of data. That said, I think, we spend usually, about 3 to 4 weeks prior to launching a process after we've signed an engagement with a business owner, figuring that out. Right. And there are some owners we work with where we say, hey, we'll ask for kind of an initial list of information that we need that is some of what you laid out, but is about 15, 20 items. And based on how we can get that information and how quickly that goes, we'll augment our approach. Right. And so sometimes we're working with business owners that are just, very entrenched in operations, have issues from a systems perspective where they just don't track data that way. And sometimes we'll call an audible and say, hey, we were initially planning to run a full process and run this out to 15, 20 groups and run a, 2-stage bidding structured engagement, but hey, that's not what's going to get you the best outcome. Right. And so I think a lot of that is being able to listen to the people that you're representing and learn from them and still find a way to get the outcome that they're looking for with the information that you have. And so, I think there is some flexibility there that we have to be able to show on being willing to groom that data, right? Hey, what can you give me? What can we turn it into? And so I think that there's a a calculus that we do with, per deal on what that's going to look like. On the flip side, as we get, some owners will complete our data request in a day and it's all perfect. And it's, hey, we're going to run hard at this thing. Right. So, but, even for owners that don't have that, there is, that's where the market knowledge and hospice or sector specific expertise, I think, is super valuable, because I can go, to a specific group I know and say, hey, data might be a little bit of a limiting factor, but this is the perfect deal. You still need to make sure you win this one. Right. So that's that. But I think, from a process standpoint, that's where we really do push market prep. And that's really not a service that we offer. Right. I will look at the business. I will tell you what's great about it and what you should improve on it, but I'm not going to go in and do that work for you. And so that's where we do look at groups like Maxwell as, hey, bring these guys in. They know the transaction process. They know what we're going to be looking for when we go to market the business, and let them get you ready. Right. And then when we go run your process, I'm going to work with Tom and his team. And it's going to save you a bunch of the back and forth reps on gathering information, because they're going to be there with you.
Yeah, let's not get that wrong. I'm the founder, but I don't do any of that work anymore. Jennifer does it all now.
Not Tom
Jennifer and
specifically,
Jade. I was
sure.
just kidding. Yeah, no, I don't do that anymore. Come on. No, all right. So let's do that. Let's ring. I'm calling you Alex. Alex, I want to sell my business. I'm a 250 patient hospice based out of Houston, Texas. Walk me through, because a lot of people that are on this call or that are going to listen to this podcast have never done that before, right? They've worked their ass off. They've grown their business. They've struggled. They've put nights, weekends. They put kids to bed, and then rented and did EMR work. They're trying to pull all these metrics. They've upgraded their EMR. They've invested their whole life in this business, and so they want to go through this sales process. Take me through that, kind of the steps that are going to happen, because I think it'll be really important for these listeners.
Yeah, everything with us starts with that valuation, right? So, there's a learning and valuation process where I want to know the story, right? Back to what I said earlier, 250 ADC is a great agency. If you've built it in 18 months, I'm going to have a hard time selling that as something that's going to be replicable by a buyer. So I want to understand how we got here. I want to hear the business owner to talk about, what's special about the business that they've built, right? Because if I'm going to represent you, I need to know that. I need to buy into that. I need to be able to invest myself in that as well, right? And so, there's a process we go through for that. But our valuation process, we try to keep pretty simple. We'll look at some clinical KPIs. We'll look at some income statements, a balance sheet, those things. We'll do an adjustment and a normalization exercise, right? So if you've got an owner paying themselves $1 million of salary, we're going to adjust for that, right? On the flip side, hey, if you've got a bunch of employees that are underneath, what market comp is, a buyer's going to true that up, right? And so they're going to look at that and say, okay, these employees are working here at the agency as a result of the fact that the business owner is the business owner, and so when I buy this business, they're not going to want to do that, right? So I got to make sure that they're compensated in line with market. So one of the things we talk about on EBITDA is a lot of folks assume, hey, EBITDA is I'm going to take my net income, I'm going to add back my comp, I'm going to add back, my boat, and I'm going to add back my travel and whatever, and that's going to be it. There's a normalization process past that really is us putting our buyer hats on a little bit and saying, hey, when someone buys this business, what are they generating? Right? What does this look like? And so we will fluctuate and weight our valuations for that, which I think is somewhat rare out in space. I think a lot of folks that do what we do throw that into later. We don't want to do that. I want a business owner to know at the starting point, hey, this is the minimum I'm going to get, right? And then, hey, if we go through this process later on and hone our understanding, find more adjustments, see growth over time, my price is going to go up. I don't ever want to have to be at a place where we're too sparse on the prep on the front end, and then on the backside, I have to go back and say, hey, even though I quoted you 25 million, now it's going to be 18. Right. So, we have our process built for that, but we'll do a valuation over the span of about a week. We present a normalized EBITDA, a valuation range, and we'll propose a strategy, right? So we'll walk through a process of what we want to do, how we want to market the business. Sometimes that is, full process dog and pony show. And sometimes that's, hey, there's 3 people that are going to beat the market on this. We want to put them in a room and let them make offers, and that's what's going to get you the best outcome, and you're going to save 6 weeks, right? And so that's our process. Everything is customized, everything is specific to that business. And then from there, after, hopefully we're chosen as the intermediary to move forward, there's more into that prep process that we get into with bringing in third parties and those sorts of things. But
I'd like to also thank our premier sponsor, Telehealth. Telehealth is used on a daily basis to figure out where doctors send referrals, as well as facilities. There's all kinds of data in the home health and hospice space inside of Trella. We use it a lot for acquisitions. So when we're looking at agencies that we want to be acquired, or helping agencies create de novo strategies or market studies, they look at it to figure out, do you dominate a community or not? How many Medicare lives are in those communities, and then how many hospice or how many home health patients are there in those communities. Telehealth also has a CRM product that allows sales and marketing to have clinical intelligence as well as market intelligence to steer them in where they're calling, making sure they're doing the right amount of calls, as well as documenting their sales calls inside their product. You can find them at TrellaHealth.com. Also like to thank our sponsor, IntelliTriage. IntelliTriage is a human-in-the-loop, nurse-first triage company that simplifies the triage function inside of the home health and hospice community. You can reach them at IntelliTriage.com. Yeah, it's really good. Talk about the data room a little bit. So it's funny. I remember the first time I sold the company, and they're like, all right, we got to create a data room. And I'm like, what the hell is a data room? I'm like, what are we doing? And it's amazing how much data gets put in the data room, by the way. It blows my mind. And I've been through a lot of transactions, and usually once the deal's done, everything in the data room just like evaporates. And like, what happens to all the data room data?
I see our data room bills every month, so it blows me away as well. But yeah, we'll customize a data room for each deal. We have analysts that are kind of the keepers of that room, and it is the lifeblood of our process, right? So the materials that we build live in there. The raw data that inform the materials that we build live in there as well, and that is where information sharing occurs throughout our process. And so the specific vendor that we use allows us to understand how buyers are interacting with the data as well. So, who's downloading it, who's viewing it, how much time are they spending within it, things like that are helpful for us to understand when we're in market, what kind of engagement we're getting. But we try to make it exhaustive as possible. I think what we default to, 20 years of hospice deals later is, hey, this is what we're going to provide that meets the intersection of not too onerous for our business owners to find, and also is enough for our buyers to sink their teeth into, and then we'll work with the business owner to provide the rest of it after. Right. And so the buyer to buyer, they're actually, even now in the market we're in, there's still a good amount of variance in what some folks will ask for and how they want it spliced up. And so the data room is a beast, and it only grows over time, right? After you get under LOI, that's the hub for diligence, right? And so we have a process that we follow where our analysts will actually scrape and file all of the data that our sellers upload, and they'll file it in themselves. So that way, when the vendor or third party or the buyer themselves asks, hey, where is this? We don't have to ask the seller to answer that question. So we're constantly improving our process on that front as we grow our firm.
Yeah, and that's a big piece of it, right? And so we'll talk a little bit here about distraction in a second, but you guys understanding the data that's getting uploaded from the seller and then categorizing that and loading it in the right spot eliminates a ton of questions. I mean, it's one of the things that just to frustrate me. Like, I've uploaded that file 4 times. There's a payroll file in there. I know you know where it's at. Why do I got to keep answering this question over and over and over? And by the way, you may have 10 people that are looking at this business that are all going to try to bid on it. And so you get 10 different analysts that work for 10 different private equity companies. So you got 100 people asking you questions of where everything's at. And so that takes me to my next question, which I think is a good one. Alex, I'm selling my 250 patient agency. How do I sell that at 255 or 260 ADC versus 230 ADC? Because during this process, I got completely distracted. And it happens all the time.
It does. And I think part of how we battle that is with education on the front end. And as we go through an orientation process with every owner that we engage, right? And so part of that is, hey, the business is the priority now. When we're in market, the business will still be the priority. When we're in diligence, the business will still be the priority, right? We've got to, and even past, maintaining, we advise owners, hey, if you can give us some organic growth throughout this period, we can monetize that. Worst case, if there's an adverse findings through diligence, a lot of the time, if there's organic growth, right alongside that, we can horse trade on that, right? Growth can be insurance for the outcome of our process in a lot of ways. And so one way we battle that is education. I think a lot of that also, though, Tom, gets into the buyer you're working with, right? I think we build relationships, and we go through what we call a buyer profiling process that gets done every quarter. And we're getting into not just what do you want to buy and how much do you want to buy, where do you want to buy it, what do you want to pay for it, but also, how are you going to run diligence? How are you going to integrate brands? Are you maintaining the brand? Are you getting rid of the brand? How are you going to handle staff? We want to be able to solve for business owners for more than just that top line value. We need to be able to pinpoint, with a sniper style level of accuracy, a buyer pool that's going to be able to solve for everything that the seller wants, not just value. But on topic here, I think, there are certain buyers that tell us up front, hey, what happens if the business grows over diligence? How are we going to price that in? What happens there? We'll have owners or buyers that tell us, hey, if there's growth, we'll be happy to consider it and evaluate how that impacts value at closing, but it's going to go the other way too, right? So, be ready for that. You want the upside, you got to be okay with the downside. We have private equity buyers as well, though, that'll tell us, hey, if they grow a little bit, don't come back and try to retrade. That's priced in. We're agreeing now. The price is the price. Unless something crazy happens, we are where we are. That's how our team looks at it. On the flip side of that, if there's a little bit of slippage because this process is long and hard, we're going to be okay with that too. And so that part, I think, we address with education up front, but also with how we form our buyer pools to make sure, if we have an owner that tells us, hey, I was at 180 ADC 6 months ago, I'm at 230 now, I'm going to be at 300 by the time we close in 6 months, that informs how we stack buyer pools.
Yeah, it's super important, but it's also the other side of that distraction is my CFO just took a 2-week vacation and went to Europe, and he's going to be disengaged. And right in the middle of the process, you're like, oh man, come on. Okay, delay. And then the rate cut comes out, and now we delayed more, and now we have a problem. So, you got to get your team ready as well. And there's always this sensitivity, especially in the smaller agencies, is how far do I take it down in the team? How many people know about the process? Everybody knows there's people walking around in suits and ties. I mean, I remember back when I was selling Millbrook to GE Healthcare back in my early days in early 2000s, like, we had no suits in our office for years. And then all of a sudden there's 12 people walking around in suits every day, and they're all different. And like, oh, we're not selling the organization. Really? Come on, guys. We're not stupid over here. And, customer services, we all of a sudden, the conference room's tied up constantly with people in it. Everybody knows what's going on. So you got to figure out who you tell, when you tell, how you tell, and how you get everybody ready and get the management team ready to go. And so that's part of your job. And I know you guys do a good job of that. Let's take some legacy questions. So you look back in your career, you've been doing this for 10 years. Dad's been doing it, 20, 25 years. What impact are you most proud of that you've left on, the sellers of these organizations?
Yeah. I mean, that's an interesting question to answer for what we do, because there are no small deals, right? Every deal for somebody is life changing. And so, we try to keep that front and center. I think the legacy that we want to leave is being a good advocate for business owners that took more than just a transaction based approach, right? I think we strive to make sure that we actually understand the businesses that we represent, and then it's not just another deal for us. As we grow so quickly, it's a lot of hiring that has to be done to enable that we can support that. But I tell our associates here, you need to know the businesses that you're working on as if you were buying them yourself, right? And so I think there's an owner centric, careful mindset that we try to have with how we run our deals. And then I said this earlier, but just I want buyers, sellers, third parties, everybody to think of agenda as people that do the things they say that they're going to do, right? And so that, for us, that's the cardinal sin with buyers. And hey, we're not we don't do things that are unethical. We're not, if you're the first offer that we get in a process, your offer is not going to be marketed to other buyers, right? Some folks have a hard time believing that, but it is the truth here, right? We don't counter more than one offer simultaneously. We want to give everybody, if we're going to give you a counter, in my opinion, that means, hey, if you do this, we'll sign, right? So if I'm saying that to two people simultaneously, logically, that's an issue, right? And so I think that's the biggest thing for Al and I is building a brand composed of people that do the things that they say they're going to do, and that feeds back into the faith-based approach that we have. Right, we want our business to really be a legacy and a ministry. We have a list of charities that we have here internal at the firm. Out of every deal that we do, we offer our client the opportunity to choose a charity off that list that we give a portion of our fee to. And so we love that for the impact that it has in the communities that we're in, and then our advisors as well. They have the opportunity to engage in that, and a lot of them do also.
That's awesome. So awesome. All right, I'm gonna vote for the veterans for the donation of the charity. So that's
You got it, man.
I'm a veteran, as you know it, and I love giving. The Folds of Honors is a huge charity that Jennifer and I spend a lot of time giving money to, and we love that what they do. And it's not just for education; it's for trades and all those kind of things of our fallen veterans. So it's cool. Congrats for doing that. That's awesome. It's funny because I was asking Jay about this question. So Jay Duty's the COO over at Maxwell Tech, and I was asking him the same question as I was prepping for this call. We were talking last night, and one of the things he said is, I want people, and this one kind of hit me pretty hard. He's like, I want people to know that we earned, if we're advising or working with an agency through Agenda or whoever, I want people to know that Maxwell Tech earned their money. Like they literally earned, and you would go back and you would say, we paid them a lot of money to do what they had to do, and they did a lot of work for us, but they earned their money. And that was really important to me. And Jay, I love that. I want to be able to earn it. I'll tell you a funny story. Jennifer and I sold a house here recently. The guy offered us full price and bought all the furniture and everything in it. We're like, oh man, our real estate agent did a great job. But I'm like, I really don't want to pay him that much money for doing this. And then the buyer came back, and so he did an inspection on the house, and so they came back with like 40 pages of stuff. Fix this brick, fix this wall, this door jamb has a leaky sill, this window's got this alarm battery's out, the smoke detector needs to be replaced, all that stuff, right? And I'm just like, okay, we'll just knock money off the house and give it to him. And the buyer came back and said, and this guy lived in Napa Valley, and he was moving to Scottsdale, and he's like, we don't know anybody to do that. We'd just like for you to fix everything on the list. And I'm like, oh no, like that's like the worst nightmare, right? You want me to go hire all these people and bring all these, and my real estate agent's like, Tom, I got it. Just all you got to do is Venmo these guys when I tell you to Venmo them, and I'll take care of it. And he earned every penny of his real estate fee. And real estate fees are all controversial now anyway, because, of all the new rules that changed, but he earned every penny of it. He was at my house for 20 days straight, meeting contractors, showing people what to do, taking videos. I'm like, okay, that guy earned his keep. And by the way, he's going to get the rest of my business. If I sell another house, he's going to be the first guy I call.
Yeah.
So shout out to Michael Johnson in Scottsdale. But yeah, it's what we want. I want to earn the money. I don't want you to pay me and say, wow, why'd I pay those guys? I want to earn it. And I think that's what you guys do over at Agenda is you're trying to earn, it's expensive to sell a deal, but you're earning that.
It is. Yeah. We're well compensated, but you're absolutely right. And I tell our deal teams, that nothing should go unresponded to. Nothing should go unanswered. If I have a business owner that can't reach some member of our deal team, do not let me find that to be the case. This is too high stress of a process for a business owner for us to not be there every step of the way. And so you're absolutely right. The biggest honor, my favorite thing that's happened over the years is when we'll have a business owner that we sell a business for that comes back 5-6 years later and wants to sell another business through us. For me, that's the biggest thing. And that tells me, hey, that person, sold their business, their baby, their everything through us, walked through the whole process for us, and then left that experience thinking, hey, whatever I paid those guys was absolutely worth it, and I'm going to do it again. And so that's a great way to put it.
It's validation right there for sure. And it's something we really pride ourselves in. And by the way, this is an emotional process. This is more than just a financial transaction. It is an absolute emotional process. And I know you and your team have to be counselors, you have to be therapists, you have to be, sounding boards, a shoulder to lean on, someone to cry with. I mean, it's a big deal because I mean, these companies have started, and most people are scared to death to start a business. It blows my mind when I talk to people. You're scared to take that risk because it's a big risk, right? You're risking your family, your livelihood. Most owners that start home health and hospice, they finance their house or refi their house or borrowed money from their families and friends, and they started a company, and then now they're going to grow it, and they're, it's an emotional stress, especially the smaller deals that haven't transacted before and they've never done this before. It's an emotional deal, and so getting them through that process is great. It's awesome. All right, Alex, how do we get a hold of you? Like if we want to reach out to Agenda, or if I want to sell
Sure.
my company and I need to call you, how do I get a hold of you?
agendahealth.com. I had to think about it because we're redoing it once again right now. But that's a great place to start. That'll, if you're a buyer that's looking to see opportunities, you can do that there. If you're a seller that's looking to have a conversation, whether that's about selling this year or in 5 years, we're always open and happy to be a resource. We also have content on there that might be informative and valuable for you. LinkedIn's another great one. Our firm's active on LinkedIn. I'm active on LinkedIn. If you want to shoot me a message to chat with me personally, I would love that. But I would probably say website is a great place if you're looking to just explore who we are, what we do, and you'll also see a bunch of deals on there, right? So if you want to go thumb through the deals we've done across the country, across these spaces, we have a series of our deals that have been announced. We have some case studies on there from owners that have worked with us, video form stuff from former owners, and so if you're looking to see, I want to hear somebody that's actually been through this process talk about what it's like working with Agenda. That's a great place to start.
That's awesome. And we'll have Cole post those on the show notes here too as well. So, well, dude, I really appreciate the time. I think people are going to learn from this episode. I really appreciate all you've shared, and congratulations on all the success and continued success, and love working with your team and working with you and your dad and the rest of the gang. So appreciate you coming on and sharing. It's been a real blessing.
Yeah, thank you, John, for having me. Certainly appreciate the opportunity to do this and to be partners with you and the group at Maxwell. We look forward to maintaining that and growing that here as we go forward.